Inflation really is like the mythical Greek beast, isn't it? The multi-headed hydra. And if supply chain pressures now, as you point out, Nathan, are set to intensify, then what's the likely spillover then into inflation outcomes? And where does this leave the Fed?
The supply chain pressures, in my view, are poised to intensify. Clearly, we're seeing an intensification of commodity prices, which is related to some of the supply chain issues, but also over and above it. And all of it is happening in an environment with red-hot goods demand as a result of the pandemic. So you've got all of these factors that are interacting. And I think that if we can get to a place where, the supply chains are better, the commodities are better, that's going to be very helpful to the Fed. But that really feels to me like now, maybe more later in this year, maybe even a Q4 story. And the inflation picture is going to be, in my view, pretty rough over the next couple of quarters. And I think the Fed is going to have to act. I'm not sure just communication alone is going to pull it off.
Understood. And Nathan, when you look at this dissonance between risk assets and what the bond market is telling us, we've seen this type of dissonance before, back in 06, 07, prior to the global financial crisis. Is history about to repeat itself, especially when you consider the leverage that is on government balance sheets, consumer balance sheets, and corporate balance sheets?
Right now, the risks in the system are first order. I think it's primarily because of the intensity of the shocks that are being experienced, but there are vulnerabilities in the economy. One other perspective on this that's consistent with that view is when I look at the equity market. I think what the equity market is really the most worried about is recession. And Jay Powell in his press conference was fairly optimistic that, well, maybe there's enough momentum to push things through. I think the bond market is most worried about a ongoing significant increase in interest rates. And Powell's speech, I think, is veering a little bit more to that risk of the bond market, and hence is hitting bonds so hard over the last 24 hours.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.